Well, we just got the job openings and labor turnover survey data this week, and that showed a big slowdown in hiring in a couple of industries already having taken place in June. An 18% drop in real estate, an 8% decline in professional business services, a 10% drop in wholesale trade. And then there were some big drops in job openings that hint at further declines in hiring in the coming months. 29% drop in retail, and another big drop in construction as well. So there are some warning signs that hiring may be cooling down in a broader set of industries.
Yeah, I sent my team a quote from the great Julia Pollak yesterday. You were talking, I think, to Steve Leeson about the jobs market, so I'm going to quote you back to you. And Julia, you had talked to them about what you called, I think, was a dramatic reallocation of capital. I hope I'm quoting you correctly, meaning that this job market is, let's just be, I don't know how to phrase it. It's screwy. It's weird. It's hard to figure out. There's people have just vanished from the workforce. You can't find enough people over here, but yet there's 11 million open jobs. It's a weird time.
We had very, very strange conditions prevailing during the pandemic. We had record low mortgage rates. We had record fast growth in house prices. And then you had these very, very low interest rates that meant that the only place you could really get a return was in the stock market. And so tech companies were seeing investors throw money at them and totally relax the conditions on that funding. That has now changed because interest rates are rising, and so investors can get a risk-free return somewhere else. They don't need to accept this huge amount of risk. And then, of course, the housing market has cooled dramatically with that increase in interest rates. You're not seeing every American try to refinance their mortgage all at once. So in that JOLTS report, we saw that the biggest decline in hiring took place not in any particular industry, but in one business size class, and that is large companies with 1,000 to 5,000 employees. Why? I mean, these are the kinds of companies that are typically publicly traded, that issue stock, and that are now facing a lot of pressure from investors because of this huge tech rout that we've seen. Of course, we're seeing a bit of a rebound there. We are seeing, a couple of the things that went really dark in June turn around now. So we're very much at sort of a saddle point in this economy where it's unclear whether gas prices will fall again, mortgage rates will fall, whether the stock market will rebound, or whether there is bad news, more bad news ahead.
The unemployment rate is low, primarily in part because over 1 million people have simply vanished from the workforce. Unemployment rate measures only people looking for jobs. It'd be much higher if we had those 1 million plus people. And every business owner you talk to says, I can't find workers. You wonder, Julia, where they went. A lot of people have just reevaluated their lives. I get that. Said, I want to do this. I want to do something else, or I don't want to do anything. Kind of wonder how they're paying their bills. How do you see the job market? The jobs number, to be fair, hasn't mattered for 2 years because of the pandemic. I think it may start to matter once again. How do you kind of see the macro framework right now?
So I think this jobs report is probably the most important one of all because there is such enormous uncertainty. The best case scenario is that the Fed can raise rates just a little bit, that inflation will be very responsive, that inflation will come down all by itself for all kinds of other reasons like a decline in shipping and trucking costs and gasoline prices, and that the stock market that priced in the risk of a recession long ago is able to rebound, that companies are able to weather the storm because they have double-digit profit margins and are sitting on $4 trillion. That's the best case scenario. The worst case scenario is that the Fed will have to raise rates a lot to get ahead of inflation, that inflation will rage on. In past inflationary episodes, the Fed has had to raise rates above the inflation rate to bring inflation down. In that scenario, the sort of Larry Summers scenario, interest rates become so high that they really do shut the party down. The companies see a large decline in consumer spending and in revenues. And that's a very painful scenario in which the unemployment rate rises to 6%, as Larry Summers has been warning. And it's very unclear now where we are. Whenever you have that kind of uncertainty, you see a lot of companies pull back, hold on investments and just wait it out. So that's another factor at play here.
Well,